All right, here back again. Today, thanks for staying strong. I know it's getting late. This panel is very interesting because we are visited with one of the best investors in the Web3 space. So I would love to start off with a quick introduction of everyone, speed pitch, maybe best kind of achievements, and who you are.
Hello, everyone. Very happy to be here. Thank you for hosting. My name is Zurab. I'm a founder at Bitscale Capital. We're an early-stage venture fund. We started in 2017, prop capital only. Just to give you a few names, we're seed investors in companies like Lido, Pendle, Maple, Injective, Renzo, Nansen. I would say pretty balanced portfolio across the space. And outside that, we have been particularly active on liquidity provisioning strategies. This is our bread and butter up to date. Thank you.
Hi, everyone. My name is Joey. I lead the consumer team on the investment side at IOSG. We're also started in 2017, mostly operating under China. We made quite a few early bets. In 2017, we made a few like L1 bets, like Atom and Polkadot, and caught the early DeFi wave with like 1inch and Maker, and then also have had a good thesis around modularity, and so we invest into a couple of DA layers like Celestia and L2s like Arbitrum Optimism, and now we're focused a lot on like consumer AI, DeepIn, and payments.
Hey everyone, Ian from Foresight Ventures. So Foresight is a venture arm of Big Ed Exchange. We support both early stage and growth stage project. And so for now, we have a very extended focus put on the stablecoin payment, crypto payment project. Thank you.
Hi everyone, I'm Clara from Lightspeed faction. So we were formed as a joint venture together with Lightspeed, with our focus being purely blockchain and crypto, and we look primarily at the early stage, with seed to Series A being our focus areas. So we invest in anything across the stack, from layer ones all the way up to the application layers. And some of our portfolio companies include Athena, ZK-Sync, Lens, Figure, which just IPO'd 2 weeks ago, and like the list goes on. Our current focus is on a broad range of items, so like includes DeFi, includes RWAs, payments, as well as emerging use cases such as consumer, social, AI, etc. So yeah, very excited to be here.
Nice. Actually, this was a great intro round, fast, just how I like it. Now, as said, we have some of the best investors here today with me, and I'm burning to ask the first question, which is about really breaking the ice and about unsustainable yields. So when you think of past cycles that you've observed, deals that you've seen in these cycles, and specifically token designs and token models, what are a few bad examples about unsustainable yields that you may have seen patterns on, commonalities, and would love to see if you can share anything today with us? Anyone?
I can start with like one example that comes to the top of my head. I guess like Celsius is a pretty decent example. Like I feel like a lot of it had to do with, I mean we see the same kind of pattern emerging today, like with Vault's meta. A lot of it has to do with like who's the risk curator and who's the operator behind something like a consumer-facing product that's promising X yield, right? I feel like now that we have pretty mature curators in the space, we had a couple of cycles of different like ways to actually generate yield. I think there's pretty interesting things that have developed. Like the yield itself has become a little bit more mature, and people have been able to create like a more robust like risk profile. So I feel like that is like more crucial, but I'm sure there's other examples as well.
I would say like we've been early farmers in the space, like day one LP Sushi, Y-Earn, Harvest, Badger. So we have seen many different designs. One key takeaway is that unsustainable models comes where there is only payment based on the governance token without proper external external rewards that can be earned, revenues that can be used to buy back the assets. And one of the key takeaways is also that if your token model and rewards model is based on trust, you already lost before you started. So I think to make it sustainable, there should be a business model first. There should be a proper economy inside. And we have seen quite many of those examples. In the short term, it did produce some cash flow, but it was not sustainable. We're pretty much aware about some of the unsuccessful stories in the space, especially in Korea. So I hope we can avoid this in the future.
So yeah, so I'll talk in a more general perspective. I think one term we heard a lot in the last cycle or even this cycle is the matrix TVL, right? That's generally people will ask like, what's the TVL of this protocol or what's your TVL? But that's actually, I don't think that's a very sustainable matrix to measure a protocol, because TVL doesn't actually measure how good the protocol is, revenue generating or how good its, capital efficiency. But more importantly, what we need to consider, or if we want to consider whether a protocol is sustainable, we have to see the ability for them to actually convert this kind of high TVL, which they actually rented from the users by high token incentive, to a cash flow or positive revenue generation. So yeah, I think that's one thing I should mention.
Yeah, I think I agree with all my fellow panelists. I think three most important takeaways. One, there needs to be real economic value that meets intrinsic demand that needs to be generated in order for your yield to be sustainable. And two, when it comes to tokenomics design, it's fine to use token emissions in order to bootstrap initial traction, initial mindshare, but tokenomics can definitely not be your main proposition when it comes to selling the yield as a product. So I think the takeaway here is that tokenomics, the way tokenomics needs to be designed, it needs to be more long-term oriented. How do you incentivize, how do you attract long-term users instead of mercenary capital, which I think is what we have seen a lot in the past cycle. And the third one, I think, is on transparency and risk mitigation strategies, whether or not it's backtesting your strategies, whether or not it's doing scenario analysis in order to predict the worst case scenario. For instance, how big of an insurance fund should you raise if you predict that there's going to be a black swan event, and ensuring that there is sufficient transparency dashboards in the event whereby certain trust factors are required, even though that isn't the optimal DeFi use case. So I think these three are the main takeaways that, at least for myself, I had from last cycle.
Now, obviously, we have a lot of curious retail people today with us, and I would love to ask you as a quick follow-up about real examples of successful business models that pay out yields in sustainable ways. Are there any companies that you can think of right now that you would maybe want to name for checking out and curiosity purposes only?
Yeah, I'm a bit biased, so I'll name Athena just because it's a portfolio company, but not just because it's a portfolio company, but also because they have managed to incorporate yield that's generated from exogenous sources. So one is by earning delta neutral yield, putting on delta neutral yield strategies, and two is by deploying a T-bill product as well. So I think it's really by enabling users to be able to earn from these exogenous products that allows a more sustainable yield source that can be accessed by just your average retail users.
I guess I can talk about hyper EVM. I think there's a lot of these on hyper EVM just because there's a very obvious exogenous yield, which is just through funding rates. I mean, Athena is a very big testament to this model actually working. I think not builder codes. I think the core writer functions on hyper EVM let you actually execute in a much more efficient way, so that you can kind of have this in-house within DeFi and not have to rely solely on CDFI, have access to different centralized exchanges. So I guess like an okay competitor for Athena would be, you look at Liminal or Delpho. I think they're kind of new stablecoin project. Hyperbeat. I think these kind of projects are pretty sustainable yield that comes like exogenously.
Actually, now that you have touched upon CDFI, let's briefly touch another question that is burning on my mind, which is about specifically XRPL. Now, we see that there's definitely a new trend coming up where banks and institutions are looking into crypto assets, and they are trying to enter, yield generation opportunities. Now, but it's hard because of various reasons. There's regulation, there's setup, there is lack of infrastructure, but they're coming. Now, XRPL is interesting because Ripple has been doing quite some effort in, creating these rails and infrastructure for players to emerge. So my question would be to you guys, are you observing the XRP ledger? Are you seeing, benefits, challenges that arise from this ecosystem? And are you, observing any particular movement in this segment?
Yeah, I'm happy to share a few thoughts here. So I think there are definitely several benefits XRPL offers. For example, there is a native DEX. It has a really high through output. So if there's an ecosystem project which really needs this kind of financial rails with high through output, that's definitely a big win here. What are the challenges here? Maybe, the liquidity is quite fragmented, and EVM is totally on a different side here. Maybe like finding some bridges between, how to bridge liquidity there properly. And there is always a need for better UI. I know there are several teams are already doing a great job in creating wallets to make a really good UI to onboard users, which is probably one of the most important things. And I was really surprised that lots of things have been happening at XRPL, and hopefully it will continue doing this way.
Yeah, so I would say the native compliance and the the low gas, fast finality on XRP infra, that's definitely one of the advantage they have. But in terms of the challenge, I would say still we need more extensive ecosystem project, DeFi support. The thrive of DeFi protocol, that's one of the key fundamental for you really need have a sustainable ecosystem on XRPL. And then I think, but one good thing is the compliance is always come for the first place. So we're very happy to see the XRPL have extensive supportive from DBS and from Clean Tempton. That's a very good sign. Yeah, that's.
So that brings me to the question about concrete use cases that you would like to see in the XRPL space. So obviously, Ripple is focusing very strongly on RLUSD adoption, institutional adoption. Now, retail adoption is just emerging. We see the first XRP companies emerge. Quick self-promo, Doppler is one of the biggest XRPL projects focusing on retail and institutions. But what are you seeing? Like, what are use cases that you would like to see, that you're observing, that you have seen and evaluated? Want to share any insights on this?
I think from my side, like obviously, we touched on DeFi functionalities. I think there's some more advanced cases that you can bring. For example, like perp trading has found pretty amazing PMF within crypto so far. And there's a lot of different ways you can branch out, it's even just within DeFi. But from a consumer standpoint, I feel like there's also pretty interesting mechanisms there. Like, for example, like 60% of the US GDP is taken over by consumerism. I think if you're trying to emulate an economy that somewhat resembles that, then you do need some sort of like discretionary spending. And I'd like to see, like, especially because the community for XRP is so organic and so kind of like focused. Like I'd like to see like more consumer behavior, whether it's like games, whether it's like casinos or shopping or these sorts.
Yeah, I think for myself, like what Joey mentioned, like the XRP community is super organic, and yeah, like I think there are a ton of folks that hold XRP, and you guys are not looking to sell. Like hopefully you guys are not looking to sell, and yeah, I would like to see more applications that will allow you to do more with XRP and would be able to onboard users very easily. Allow you to earn using your XRP, allow you to lend, borrow and lend using your XRP, and then use it as collateral, et cetera, et cetera. So more use cases for XRP, just given it's such a large asset class in terms of market cap, and a DeFi flywheel that's being able to span up based on that. I think that is kind of like the hope and vision for XRPL that I personally have.
Yeah, I think as for me, as I mentioned previously, I think seamless onboarding is probably the most important thing. I think there's already a big amount of efforts have been done, especially by Doppler team, by having those kind of seamless onboarding tools. And I think this is just the beginning. So there is a native yield coming out of there, and there are many other opportunities. So the first step is to onboard users to the ecosystem, and then they can be a part of the DeFi. They can get access to more kind of structured products, which can be more complex. But the first step is to have a proper, fast and seamless onboarding.
Thanks for sharing your thoughts and insights. I think this was a lot of information to digest. I would love to ask one final question, which is basically about your outlook. What is, I guess, a use case that you see will emerge as the next layer for on XRPL that will inevitably drive the next wave for digital asset innovation?
I mean, for XRPL and for the space in general, I'm very bullish on one of the things which is AI agent economy. If you can just imagine, let's say, hiring one of the smartest students from Harvard and Oxford University at the same time, and they work for you 24 hours without weekends. This is what we see our future will be. There will be agents which will negotiate fees, which will manage assets across different chains. So this is one of the things we feel like we will meet in the nearest 1 or 2 years, and hopefully there will be proper rails and financial rails to make it happen, as well as tech side as well.
Yeah, I agree with the AI part. I think there's a very specific subsection that I think AI is really good at, more so than just like swapping. I think like yield is quite scattered. There's definitely a way to somewhat like optimize for this, and there's like specific opportunities that you can only find by just like trying to really look for it, and I think like AI can help like present this just like right up your nose, and it's a lot easier for, especially just like people that don't want to allocate like a significant amount of their time, but also on top of that, I think a really big promise for a chain like XRPL and an asset like XRP is like remittance and mobile top-ups and e-commerce. I think these are one of the biggest use cases for other blockchains and stable coins in general. So once these rails are kind of more mature, I feel like this would be a really, really good segment to tap into.
So yeah, I mean, AI is definitely a very interesting topic, and I do agree that's actually the one topic we should, keep focusing maybe for the next decades. That's worth it. But I think for, that's not like short term. I think AI is not happening right now, but that's things we need to keep focusing on. But I think for the short term, what I personally need to focus in the field or for the XRP PL ecosystem is the how to utilize the value of crypto or utilize the value of this ecosystem or community to really solve the money complexity problem. and one good example is in the cross-border payment or stablecoin payment. I think that's also a very valuable thing that, in the short term, we can see, crypto can really express its value to, do a, 7+24 settlement, or even with moving the money around with like a lower, cost. Yeah, so that's.
Yeah, I think on my side, what I'm excited about is more programmability, along with credit markets evolving into its next generation. So I think we have seen credit markets on-chain maturing, more on the crypto-native side of things. But I think what would drive like the next unlock would be, in terms of value, would be the integration of RWAs seamlessly into credit markets. And whether or not we use RWAs as collateral, or whether or not we tokenize certain cash flows and allow for loans to be drawn based off like these RWA collateral, I think like these will be very exciting unlocks, and it will be when we see institutions start being involved with DeFi. And I think that this will drive like the next phase of development for the entire sector generally.
Well, thank you for sharing your insights, your expertise, and your also outlook. I think this is definitely something we can all now observe and going forward anticipate. It was a great pleasure, so I would love to invite the audience to give a great applause to the panelists. It was a pleasure hosting you today, and thanks for the discussion.